Good afternoon and welcome to NYFP. On this Thursday afternoon, the major U.S. stock averages are trading mixed. Joining me this afternoon to weigh in on what we've been seeing in terms of central banks and fundamentals is Sandra Navidi of BeyondGlobal. Sandra, good afternoon. Thanks for joining me.
Thank you for having me, Remy.
Well, this week a lot of focus has been on the Fed's speeches. We have to keep in mind that we're seeing thin summer trading conditions, so there's not much going on. But given that there are ongoing concerns about the timing of when the Fed will begin tapering, what concerns do you have?
My concern would be collateral damage, that if tapering took place too soon, that would be disruptive for the markets and hamper a fragile economy. But going by the parameters that the Fed has given itself, namely unemployment and inflation, and how that is going, that there's not really a big improvement, I think it's less likely that it will happen in September.
And we've spoken about this before, but we do have more jobless claims figures, and of course this month's jobs report coming up before the next Fed meeting, so we'll have more indicators to watch out for. And across the Atlantic, we continue to see improving economic data out from the Eurozone. We got that better than expected PMI services composite number, as well as German industrial output improving. But as we saw today, we got that Greece unemployment rate hitting another record high. So given that it is a rosier picture, but there are things to worry about, where are your concerns?
Well, the concern is, well, first of all, there's a little bit of light at the end of the tunnel in that we may see growth for the first time after six consecutive quarters. But the problem is that the problem still persists. The unemployment is very big, and I think the market has been quieted down by the action of the central bank, but there is hardly any growth and no growth engine. And the question is, what will happen if the rug is pulled? Not intentionally, but if a mistake happens. So I think the whole situation remains fragile.
And speaking of fragile growth, our eyes continue to be on China. We did get improving trade figures out from China overnight, but I guess all eyes will focus on tomorrow's figures out from China. We get inflation data, industrial production, and retail sales. So what exactly will you be looking for from those data points?
Well, our view is that Chinese growth will stabilize on a lower level, and so we are looking at the data, even though we think it's opaque and not always reliable, but we look to it to either substantiate our position or point in a different direction, and also to see if there are any red flags. For instance, the credit growth has been very fast in relation to the GDP, so that may point to a banking crisis. So also there are some dangers looming that needs watching.
And Sandra, we all know that central banks as well as fundamentals are important in these light summer trading weeks. But aside from the major market-moving headlines, what trends and other observations are you making right now?
Well, our biggest concern is the global demand picture. I just returned from Germany. I spoke to industrialists there, and we know Europe is very slow and fragile in growth. So traditionally, industrialists have been looking to China and South America, specifically Brazil. We know that growth is slower in the emerging markets, and the question is, can other upcoming countries like Indonesia, Myanmar, and so forth, can they make up for, or in how far can they make up for growth? And so, what exactly is the demand picture?
That is an important thing to keep in mind as well as to consider given what we're seeing right now. So thank you so much for your insight, and thanks for giving us your analysis on the marketplace.
Thank you very much, Remy.